With that, let's also welcome in our guest for the day, Nilesh Jain, Head AVP Technical and Derivative Research at Centrum Broking, and Rajesh Agrawal, Head Research at Om Capital, joining us now. Welcome to both of you, gentlemen, and thank you so much for taking out the time. And a very good morning to the both of you. I'll take up the first question, which is from Chandan Jain, who's writing us from Hubli, Karnataka. And he has a query on Unimec, and he's asking whether this is a good buy at the current levels, or maybe he can continue to buy in staggered manner or not. Rajesh, I'll take this up with you. What's the view like?
Good morning, Mahima. Good morning, everybody on the panel. I'm sorry we don't track this, so I won't be able to give any views on this.
Sure, no worries. Nilesh, enough data on the charts?
And data also indicating that the setup looks weak, and we may see a follow-up on the lower side towards 850 to 800 as well. So not advisable to take any counterweight at present level. The structure is looking weak, and we may see follow-up on the lower side to continue.
All right, okay, so that's the view coming in on Unimec Aerospace. For viewers who are tuning in, you can send your queries on WhatsApp and also call us on the number that's flashing on your screen up there. The next question that we have is from Nivendu Sharma. He's wanting to know if this is the right time to make an entry into something like a Brigade Hotels at the current price of 62 or 63 odd rupees. Right now it's trading at around 60 odd rupees. But this versus the IPO price of course 90 rupees. Would it be the right bet in the hospitality space, or something like an ITC Hotels or Lemon Tree Hotels is preferred? Rajesh, what's the view like?
See, hospitality as a sector is going to do well in the long run because of the kind of demand which we are witnessing in the entire hospitality space, I would say, with rooms not being added on the same pace as the demand is. Average room rent has gone up, but government's focus on developing tourism and all is helping, and not to forget the marriage season and the corporate bookings. But Brigade, I don't think would be a better choice in the entire space. As you said it right, ITC hotels or a Lemon Tree hotel in the mid-cap space are better. We have seen ITC hotel given very good numbers day before yesterday, or maybe yesterday, if I'm not wrong. The numbers were pretty good. They have good expansion plan, almost debt-free balance sheet, and belonging to the ITC group. I think this stock can go to around 30 to 40 odd rupees in the next 12 to 18 months. So that's a better choice, I would say.
The next query is coming in from Manoj Sharma from Bareilly, and it's on PTC India. He wants to know whether it's a right time to enter this counter. Any view on this, Rajesh, PTC India?
See, the company is doing very well. It gives out good dividend. Numbers are good. And with the kind of correction which the stock has written in the recent past, I think the valuations are also good. Somebody looking for a time horizon of maybe 1 year, it's a good entry point.
Okay, all right. So that's the view coming in on PTC India. The next question that we have is from Raghuraman, who's writing us from Chennai. He's holding around 100 shares of NMDC at an average price of 54. And he wants to know as to what are the future prospects of this company and whether he can continue to hold or not. Rajesh, what's the view like?
Mahima, just to clarify, is it NMDC or NMDC Steel? Because 54, I think it should be NMDC Steel.
It is NMDC Steel, yes.
See, I don't think it's a right choice to continue holding to this stock. The government has said that it was a divested stake, but then the denial came. The numbers are not that great. There are better choices in the entire steel space, I would say. One can switch to either Jindal Steel and Power or a Tata Steel for better returns.
Right. The next query is coming in from... Okay, the next is a caller query coming in from Hyderabad. Dheeraj, you can go ahead and ask your query.
Good morning, sir. My query is regarding United Breweries. So I would like to, I'm holding 65 shares at 1520, sir. So the stock is at all-time lows. So the stock price currently is like 3 years before the same price is there. So I would like to hold it until the summer quarter, like the next quarter until June or July for the next 6 months. Is it a good buy, or is it better to exit and shift to something like Tube Investment is my query, sir.
Rajesh, any view here? Should he continue holding the counter or should move to Tube Investments?
See, one can continue with UBL. As far as tube investment is concerned, that again is also a very good story. It's positioned as a diversified growth story. I would say strong engineering and metal business. They are moving into EV to a lot of new capex being done, and the valuations are very attractive at 20 to 100 odd levels. So both one can continue. Both counters can be kept in one's portfolio. What I would suggest is keep UBL as it is. And if you have extra funds, you can deploy in tube investments.
Okay, all right. So that's the view coming in on where UBL stands. The next question that we have is from Mr. Shankar, who's writing us from Dubai and asking about KFinTech. He's bought 15 odd shares at the levels of 1076 and wants a technical perspective on this counter. Should he buy or average more at the current levels? Nilesh, what would be your view?
Well, not advisable to buy fresh at current level and do not average because the structure appears weak. It has given a breakdown from its long consolidation range of almost 6 months. It was consolidating, and today it has given, in fact, recently it has given a breakdown. Looks like it is heading towards 960, 940 on the lower side. So if you are already holding the long position, then keep a tight stop loss at 970 and avoid doing any sort of average.
Next is a caller query coming in from Karnataka. Muttu, you can go ahead and ask your query.
Hello.
Yes.
Sir, good morning.
Good morning.
Sir, I'm holding 3,000 shares of Bajaj Housing. Sir.
Right.
Right. I am sell or hold my shares, sir.
For short term or long term?
Long term holder, sir.
Rajesh, any view on Bajaj Housing for long term?
Great company, I would say, second largest housing finance company in our country. The shown good growth in the last 4-5 years. If you look at the AUM numbers, they have grown at a good CAGR. And I think the valuations are attractive. Got beaten down since its listing at around 140, 150 odd rupees. It has come to almost 50% correction it has witnessed. So at these levels, one can even add for a long-term horizon.
Okay, all right. So that's the view coming in on Bajaj Housing Finance. The next question that we have is from Jagar Thakur, who's writing us from Mumbai. He's got 4,000 shares of AWL Agri Business and wants a view in terms of whether he should hold or book losses at the current levels. He's sitting on a loss of over 7 lakh rupees. Nilesh, I'll come to you on this one. Do you think the charts anytime will turn positive for him, or should he book his losses? Because that's a significant amount of loss.
Well, the stock continues to remain under pressure since a long time. If you see in the year 2022, it made a high somewhere around 800 to 850, and since then, whatever pullback in between we have seen has got sold into. It is trading well below its long-term, short-term moving averages. The structure appears weak. Sell on right should be the strategy. If at all you get any pullback towards 220, 240, or maybe 250, that's a good level to exit from this particular counter. Because it looks like it is heading towards 190 to 180 on the lower side. So better shift to the better stocks, avoid AWL.
Vimala Nanda from Mysore has a query on L&T. She's holding around 20 shares bought at a price of 3,650. Nilesh, what's your view when it comes to L&T?
Well, I think if I can see she's already in the money, so it's better to book profit as of now because the structure appears weak given the kind of a weak setup we are witnessing in the market. So large caps are likely to remain under pressure as well. So L&T breaking below 200 long-term moving average just today looks like it is heading towards 3,700 to 3,600 on the lower side. So for the time being, if bought it purely from a trading perspective, then exit.
Right, okay, so that's the view coming in on L&T. The next question that we have is from Ravi Chandran, who's writing us from Bengaluru. He's got around 300 odd shares of Premier Energy with around 1,000 odd rupees is what he's saying. He wants to know if he can hold or sell at the current levels because he's sitting on a loss of around 83,000 rupees. Rajesh, would you recommend him to continue to hold?
Continue to hold at this point of time, I would say. They're moving a big way into solar and renewable energy things. Doing very well. Order book is also great. Around 850, 860 odd levels, we are time to exit.
Dev from Chennai is holding 821 shares of Jindal World. His average buying price is 38.42 and is sitting on a loss. He wants to know whether should he hold this counter for the next 2 months. Nilesh, any technical view on Jindal World?
Well, Jindal World, I'm not able to, track this particular counter for the time being, so won't be able to comment.
Rajesh, have you looked into this counter, Jindal World?
I'm sorry, we don't track this.
Okay.
All right. Okay. So that's maybe next time you can go ahead and ask this question, and we'll take up sometime else. But the next question that we have is from Lakshmi Narayan, who's writing us from Hyderabad. He's bought 100 shares of Hitachi Energy at the levels of 6,500. He's sitting on a significant amount of profit. Wants to know if he can partially book his profits, or should he continue to hold, sell? What should be the view like? Rajesh, I'll take this up with you. What's the view?
See, if you have no requirement of funds at this point of time, you should continue with the stock. I think 18,000 odd rupees would be a good levels to book partial profit, and not the entire chunk of your holding. But at this point of time, it's a hold.
The next query is coming in from Ashok from Bangalore, and it's on Raymond Limited. He has around 100 shares at an average price of 952. He wants to know whether should he hold this counter or exit. Nilesh, any view on Raymond?
See, I can see Raymond currently trading at 386 rupees. So, I
Limited.
think right. Okay, Raymond Limited, which is at 386, right? So overall, the structure appears weak from a short to medium term perspective, and it looks very difficult to see that kind of rebound on the upside. So overall, a sell on rise kind of a strategy should be deployed if bought it from a short term perspective. And if somebody wants to stay put, then keep a trailing stop loss right now at 372. So 372 should be the stop loss. And if you get any pullback towards 420, 450, use that pullback to exit.
Okay, all right. So that's view coming in on Raymond Limited. We've got our next caller. Pawan is calling us from Hyderabad. Pawan, hi. A very good morning to you. How can we help you today?
Yeah, ma'am. Very good morning. Actually, I have some doubt. E-Pack, 3-pack technologies I bought at 290. Number of shares is 300. So I can invest more on it.
Okay. Got your question. Pawan, I'll take this up with Rajesh. Then Rajesh, the stock is down 3.5% today. But do you think this is the right time to maybe add more, or what's the view like?
I don't think it's a good idea to add this stock at this point of time. Maybe some amount of more correction is left into the around 200 odd rupees would be a better levels to add. As far as existing holding, one can continue to hold for a target of 260 in the next 6 to 9 months.
The next is a caller query coming in from Chennai. Ganpati, you can go ahead and ask your query.
Yeah, I want to know the experts' views on VA Tech Vabag.
Okay.
I'm holding about 1,000 shares at 1,500. It keeps falling despite its fundamentals, so I want to know the experts' views.
Rajesh, any view on VA Tech Vabag?
Very strong company, I would say, doing projects in waterways and water systems. The government focus on Namami Ganga and all these things is helping. And not only domestic orders, they have good international orders too. At these levels, one can even add.
Okay, all right. So that's the view coming in on VA Tech Vabag. The next question that we have is on PN Gadgil. I mean, Animesh from Kuala Lumpur is holding 101 shares at the levels of 622. He wants to know whether he can hold, average or sell for the next 6 odd months. Nilesh, your view on this?
Looking at the overall structure, I think it's an avoid. If you get any pullback, use that pullback to exit. It has a support, immediate support at 535. If it breaks 535, then it might test the levels of 500 as well. So use pullback to exit if bought it purely from a short-term perspective.
Next query is coming in from Ram from Chennai. He's holding 3,500 shares of Restaurant Brands Asia at a price of 76. He wants to know the fundamental view. Rajesh, any view on Restaurant Brands Asia given the fact that the promoter is now changing? Do you recommend him to continue to hold this counter?
See, I would say continue to hold at this point of time. Although numbers have been not that great in the last 2-3 quarters, but with the change of hands, let's see what the new strategy comes out. Since he has held for such a long period of time, I would say at least for 1 quarter, continue to hold for new management to give out their strategies.
Okay, all right. So that's the view coming in with regards to where Restaurant Brands Asia stands. The next question that we have is from Ravichandran, who's writing us from Bengaluru, asking about Suzlon. He wants to know whether he can hold or sell the counter. Nilesh, your view on this?
It's a sell from a short-term to medium-term trading perspective, but if a view is long-term, then keep a stop loss at 41. If bought it from a short-term trading perspective, then looks like it is likely to test the levels of 43 and 42 as well on the lower side. So again, a sell on rise kind of a structure from a short-term perspective.
Right. A new listing on the street today, Amagi Media Labs. Let's listen to what the management has to say.
Profit, I am Mahima Vachajani. Amagi Media is in focus on the back of its listing, and to understand as to what what stands ahead of the company going forward post listing, we are joined by Bhaskar Subramaniam, who is the co-founder and managing director and CEO of Amagi Media Labs, and Vijay NP, who is the chief financial officer of Amagi Media Labs, joining us now. Welcome to both of you, gentlemen, and heartiest congratulations on the listing. My first question is for you, Mr. Bhaskar. With regards to where profitability is concerned, first half you've turned profitable. Just want to understand if these numbers are sustainable going forward, and whether you expect to be profitable from here on.
Yeah, thank you very much. Thank you very much. Right. So just to give you a brief, right? Amagi is a media technology software company working with TV channels, content creators, producers of sports, news, and anybody who creates content in the whole group, right? So we're a worldwide software business that we run today. If you look at it, the biggest opportunity for us is just 10% has moved to cloud, which is where we think the whole virtualization of this whole industry is happening today. So the biggest tailwind for us is the future in terms of 90% of digital transformation that's happening in this business, and where Amagi can be the leader in this space. So if you look at it from a longer term standpoint, I think we're directionally growing quite well. You've seen our results for the last 6 months. We could hope to continue to project going forward as well in terms of managing both growth and profitability in an equal measure. And that's been part of the company's journey thus far. And we've seen the operating leverage playing out as well as we move forward. So the hope is that we continue in the same trajectory that we've kind of embarked ourselves on today. And this is what you're going to see as a company as we move forward.
Okay. Mr. Vijay, with regards to your objects of issue, it does mention that you might be looking for inorganic opportunities. Just want to understand as to what segment will you be exploring going forward from these IPO proceeds? Is it going to be in the streaming space? Is it going to be in the advertisement space? What are the options on the table?
Yeah, thanks again for having us. I think we look at our M&A strategy more not as much from a segment view as from a first principles view on the value chain. So we are in the glass-to-glass technology, the first glass being TV screen, a camera screen, and the last glass being TV screen. There's multiple steps there. And to Bhaskar's point earlier, only 10% is moved to the cloud. So a lot of the growth is ahead of us. So each of those swim lanes and steps between the first class to the last class, there are multiple opportunities that we'll pursue. That might be segment agnostic. So that's one lens that we look at. The second lens that we look at is obviously with AI being a big sort of vector secularly, globally. It's another area where we are kind of opportunistically shopping for attractive assets. And lastly, I think from a first principles perspective, we look at assets that are both strategic fit to the company and financially sort of profitable and generate good cash flow and have the same sort of financial profile as us. So those are sort of three broad strokes on how we think about M&A. It's not as much segment focus, but more at a higher altitude.
Okay, understood. Mr. Bhaskar, you have long-standing relationships with a lot of global clients. Just want to understand your revenue split right now between, global clients as well as domestic clients. And going forward, how will this evolve and how does that overall impact your P&L?
So last if you look at it, right, Amagi is a global opportunity. So it's a software that every TV network, every content creator and producer in the world needs it. So we see this as a global opportunity. We continue to kind of build on top of it. Historically and otherwise, if you look at it from a market standpoint, US has been the largest market, not only for Amagi. If you look at the media business in general, US becomes the largest market across the globe, followed by Europe and then Asia. We are continuing to see the same progression in our own business, where a large part of our business today is Europe and US together, really about 90% plus of our business today. We would continue to see that progression as we start expanding globally as well. If you look at it, we did expand in Brazil, we expanded in France and Germany, Korea, Japan. So this is a global play. We would see India starting to become really important in the next 3 years as we start seeing that digital transformation starting in the country as well. So for us, it's global. It will continue to be global. Absolutely, given the maturity of the European markets and the US markets, we would see that as something that will continue to be a larger part when compared to Asia, at least in the next 3 years. Beyond which, obviously, we'll move to a much more secular growth phase that we're going to continue to see everywhere else.
Understood. Okay, Mr. Vijay, overall, if you take a look at the last 3 years' performance, your revenue has nearly doubled. Do you think that run rate of growth is going to continue going forward? Is it going to improve? What is the CAGR growth that you're expecting, let's say, 2 years down the line?
Yeah, no, I talk about how the trajectory of the last couple of years, like Bhaskar alluded to earlier. We've always focused on delivering profitable growth. And our aspiration would be to kind of just replicate the trajectory that we've seen in the last couple of years. I obviously can't get into specifics on guidance, but our core focus, as Bhaskar said earlier, would be to continue to deliver profitable growth.
Well, the Nifty has fallen below 25,000 level, which is one of the key support levels. Psychologically, at least, is something that we have seen getting broken. 24,950 is the current level, which is the lowest that we have seen since October 2025. And with today's fall, Nifty is now trading below its 50, 100 and the 200 DMA. All the key moving averages have been broken. 280 points is the fall that we are seeing today. In the last 12 trading sessions, Nifty has been falling for 10 trading sessions, and from the peak we have seen a fall of nearly 1400 points coming in, and this is a year-to-date fall that I'm talking about. Now if you look at the top draggers in today's trade, it's ICICI Bank, HDFC Bank and Reliance Industries. All these three counters are leading to more than 100 points of fall when it comes to the benchmark index. ICICI is contributing nearly 51 points for this fall, the top dragger for the benchmark. And when it comes to the F&O stocks, it's Kalyan Jewellers, UPL, Coforge, which are down anywhere between 6 to 10%. In fact, Kalyan Jewellers has hit a lower circuit of 10% in trade right now.
I think even in terms of where the broader markets are concerned, it's a red, across that. But the reasons as to why probably the markets are falling. Firstly, the entire global sentiment with regards to US-India trade deal is still, on the edge, and we still don't know as to what the verdict is going to be. Probably one of the reasons as to why the Nifty has fallen so much. And it's not just a small fall. 300 points today as well. Yesterday we saw a drop in terms of 400 points. So 700 points cumulatively till now is what we've seen in terms of where the Nifty is falling right now.
Nilesh, 25,100 was supposed to be one of the strong support levels, given the fact that it was coinciding with the 200 DMA. But right now we are below 25,000 level as well. Any further support levels that you're looking that you're seeing for the benchmark at least?
Well, absolutely. So 200 DMA has been taken off decisively in today's trading session. Even if you see on the daily time frame chart, a rising trend line, which was exactly coming at 25,000 level, that has also been breached. On derivative front, we have started witnessing unwinding of the position because 25,000 was holding the maximum OI concentration. So we have started witnessing unwinding of the position. That clearly suggests that we may see a follow-up on the lower side towards 24,750 to 24,700. So the next major support I can see on the chart is somewhere around 25,600. That was the low that we saw in the month of October 2025. So that's the next major support to watch out for. The structure looks weak, and we may see a bit of a pullback, but that pullback is unlikely to be a sustainable.
Sensex has also fallen over 1,000 odd points, and 11th day in a row where we saw FI selling, plus there is global risk off sentiment at its play. So I think all of these factors combined together. Rupee also opened at its low today. European markets also second day in a row where it opened in negative. Asian markets also opened in the negative. So all of these factors playing its part in terms of where the downtick in the markets is concerned. But viewers, it's time to slip into a very, very short break. We'll be right back answering all your queries on the other side of the show. Do stay tuned. Welcome back. You're watching Ask Profit, the show that gets all your stock related queries answered. But just before we took the break, we were discussing as to how the market is on a free fall, and I think this is the right time for viewers, you to ask the right questions to us. So do send in your queries. You have your numbers flashing on the screen. You can either call us or WhatsApp us and send in all your queries with related to where stocks are concerned. On this side of the show, we're also joined by Vinay Rajani, who's a senior technical and derivative analyst at HDFC Securities, joining us now. Vinay, the first question is directed towards you, which is from Mr. N. Nara.